This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody, welcome to Bloomberg Businessweek Daily. This is Carol Massar along with Tim Stenovec, live at New York headquarters of Bloomberg, and a little bit of a big tech earnings churn when it comes to the markets today. We have some big earnings coming our way after the closing bell. We're talking about Tesla and Alphabet. So ahead of that, we've got a market that's kind of Little change, except if you're chip stocks. The chip makers are actually doing pretty well. Nvidia for a second climbing, day, right?
For a second day. Nvidia climbing 3%. Software firms are getting hit again. We're going to have more from Charlie Pellet in just a minute. The real story, though, you mentioned, earnings after the bell and also geopolitics.
Yeah, absolutely. We're going to get into all of that. By the way, Alphabet right now is just down a hair. And if I pull up Tesla ahead of earnings after the closing bell, that stock down about 0.8%. So a little bit perspective. Speaking of perspective, the war that just doesn't seem to find an end or even to seemingly move closer to some kind of peace agreement. We say we have a peace agreement, but it's kind of not happening. So we're going to get into the bombs, the boats, the boots, President Trump's Iran dilemma, what it all means as we watch oil prices tick higher, moving stuff around, especially from that region. There's a cost to that. I'm thinking about global inflation, certainly ahead of the Fed meeting next week.
Yeah, Chris Kennedy going to be joining us in just a few minutes. Also joining us a little bit later, Rory Heilakka, partner of the management consultant Oliver Wyman. We're going to talk about the automotive blind spot when it comes to AI.
Looking forward to that. And speaking of autos, the twists, the turns, the bumps of the global auto industry, there have been quite a few over the last few decades. Actually, go back to the 80s, if you will. From bailouts and buyouts, Elon and EVs, to China's coming of age. Bloomberg's Keith Naughton came to Bloomberg just after the great financial crisis, just as the auto bailout was certainly kicking into high gear of the big three, which are really no more. There has been so much that changed coming out of the GFC when it comes to the global auto industry, and the change continues. We're going to get into where it was when Keith came to Bloomberg and really when he kicked off his career writing about the auto world. That was back in the mid-'80s.
Yeah, 41 years ago, to be specific. 1985 was the year he kicked it off. So we're looking forward to that. I mean, this guy could write several books.
Yeah, absolutely. And I hope he does. He's getting ready, though, to shift gears. So we're going to talk about all of that in just a moment. First up, though, let's get to the trade ahead of those big earnings after the close. Here is Charlie Pellet.
All right. I thank you very much, Carol and Tim. Happy Wednesday. We're looking at an S&P 500 index. Those gains fizzling. Yes, higher. Barely up now by 0.5 point on the S&P 500 index. Flat ahead of earnings after the bell, coming up from both Alphabet and Tesla. Dow Industrials holding on to an 82-point gain, up by about 0.2%. Both NASDAQ and NASDAQ 100, both in the red. But as Tim mentioned, we got the stocks higher. Philadelphia Stock Exchange Semiconductor Index up now by 1%. On NASDAQ, looking at a loss now of 0.3%. NASDAQ 100 Index also down by 0.3%. S&P, there she goes, now trading lower, down under 0.1%. The SOX bears repeating, up by 0.9%. The 10-year, 4.65%. The 2-year, 4.29%. And the 30-year, now at 5.14%. Gold up $60 the ounce. An ounce of the precious metal now at $41.37, up 1.5%. Crude ripping higher. WTI, Middle East tensions. Right now, WTI at $86.76 a barrel, higher by 2.9%. Barrel of Brent, 94 even, up now by 3.3%. Recapping, S&P 500 index now lower, down 1 point, coming up after the bell. Alphabet and Tesla. Alphabet flat on the day right now. Tesla down by 0.8%. For the first time in 10 years, the United Nations is set for a leadership change. Join us tomorrow, 5 o'clock Wall Street time, for special coverage of a UN town hall to hear candidates for the next UN Secretary General debate. We'll have it live from UN headquarters. I'm Charlie Pellet. Carol and Tim, That is a Bloomberg Business Flash.
Hey, what makes you sure the S&P is a she? I just want to know that.
That's a very good question, which I had not given full thought to. I wasn't expecting to be asked, but let me flip it right back at you, Carol Massar.
What?
Why would she be anything else?
I don't know. Maybe she's the NASDAQ 100. I'm just going to put it out there. All right, Charlie, we'll come back to you a little bit later on. All right, we got to get to the global picture, geopolitics. We've had 11 consecutive days of U.S. airstrikes. They have done little to change the direction of the Iran war. The result, a stalemated conflict where both sides are trapped in a cycle of strikes and counterstrikes. President Trump is likely at an inflection point, escalate the war to break the impasse or find a way out through diplomacy. So writes our team here at Bloomberg Economics.
In the meantime, we are seeing market effects of this, specifically when it comes to oil markets. Oil spiking above $95. It extends this month's price jump to around 30%. This as the U.S. and Iran playing down the prospect of peace talks and disruptions to global supplies. Those continued to mount. Carol, it couldn't come at a worse time for, summer travel.
Yeah.
But also politically for the president who wants to make sure that he's selling that affordability message ahead of these midterms.
Exactly. It's not like, midterms are just a few months away. Hey, and there's also that next round of tariffs as the president is poised to impose fresh levies on products from dozens of economies. That's going to happen by Friday, according to people familiar with the matter. Let's get to it. Let's head to our DC News Bureau. Bloomberg Economic statecraft lead. He is Chris Kennedy. He's back with Tim and me. Hey, Chris, the U.S. strikes continue. We mentioned bombs, boats, boots, President Trump's Iran dilemma. It does feel like we're at an impasse. How do we see it? How do folks that you guys are all talking to see it about what happens next here in this conflict, this war?
Yeah, Carol. So like you said, there are no good choices for the president right now. And I think, oil traders are looking at some of the news that, for instance, there aren't direct negotiations happening, which suggests that we're going to be in this cycle at least for a little bit longer. The president is clearly very frustrated with the war. He is upset about the deaths of service members, and he's looking to, continue strikes for the time being. Of course, we don't know, whether we'll see additional escalation, but the longer this goes on, the larger the impacts on the global economy, especially through this continued strangling of oil exiting that region.
In terms of escalation, if we just play out one scenario, and that's a scenario that the president shared on True Social a little earlier today, and that was the idea of retaliation and bombing or striking a power plant or a bridge in Tehran, for example. Is that something that you think the U.S. would actually follow through with?
It's a good question. Of
course,
the
reason I ask this is because this threat has been made before.
Mm-hmm. Yes, of course. Yeah, and of course, these sorts of sites have traditionally been off the table for U.S. strikes. But the president and the U.S. Have consistently said that a lot of these civilian infrastructure sites are actually used for military purposes as well. I think what we've seen is that the U.S. has been striking some of these dual-use sites recently, and we've seen retaliatory strikes from Iran on regional infrastructure that certainly goes beyond U.S. military assets. Nothing that's going to be, too disruptive, but that could change if U.S. strikes continue.
All right, so Chris, impasse, who knows, right? We could, I'm sure, go to Polymarket, and there's tons of bets, or Kalshi, about what's going to happen next in this war. Having said that, there's a cost, obviously, in lives. Let's not forget damage in various regions around the world, fiscal budgets because of money spent on defense, geopolitical relationships, which seem to be being remade, if you will, those higher energy prices, higher transportation costs as the world tries to move things through the Middle Eastern region. How are you and the team continuing to calculate the economic cost of this? And we think about it ahead of the Fed meeting next week when we will be focused on what Fed Chair and the FOMC has to say about monetary policy and the U.S. economy.
Certainly. Of course, there are the direct costs, and Secretary Hegseth, Defense Secretary Hegseth, was in front of Congress this week talking about those direct costs. But of course, the more relevant costs for the global economy are the impacts on global energy markets. And as you noted, crude oil prices continue to tick up a week ahead of the next Fed meeting. We're seeing that demand for fuel in the U.S. is pretty robust still. Inventories of crude continue to fall. We're seeing additional pressure on global energy markets from Ukraine's campaign against Russian energy infrastructure and vessels transporting Russian oil. So those costs are going to continue to grow so long as this conflict persists. And it's hard to know how quickly this will happen. Another big blind spot is what is China going to do over the next couple of months? Are they going to resume energy purchases? That's been a real buffer for the global economy, since the war began.
I think a lot of consumers focus on the gas prices and above $4 a gallon, and that's a threshold. But one thing that I think a lot of people who are in the industry focus on is the price of diesel, and that being above $5 a gallon has some real repercussions. I mean, if you think about just produce, for example, let's say it comes from California. How does it get from California to another state? Oftentimes it's on a truck, and that truck runs on diesel, and this stuff adds up. How does that, in your view, play through and flow through to other parts of the economy? Diesel, by the way, up to about $5.18 a gallon right now, national average.
Yeah, certainly diesel is going to have a much deeper transmission into different elements of inflation than gasoline. Diesel is used to transport everything, as you mentioned. I would also say that diesel is where we're seeing this sort of multiple factors hit the global market. So Russia banned the export of diesel. Russia is traditionally the source of about 10% of the world's diesel exports. And I think we're going to see additional pressure on U.S. exports for diesel, which of course will transmit into domestic prices that affect everything from transportation to construction, everything, mining, et cetera. So certainly diesel is sort of the backbone of the real economy, so to speak.
Hey, just real quickly before we wrap up here, Chris, we've also got the president talking about another round, or at least according to people familiar, another round of fresh levies on products, new round of tariffs on economies. That's expected to come again at the end of the week. What do we know? And that could be what? More inflationary pressures here, just quickly.
Yeah, I mean, our base case is that the president is going to impose these Section 301 tariffs over forced labor. They will replace the Section 122 tariffs that he imposed after the Supreme Court lost back in February. The net effect is actually not that significant. It's a slight tick up. We'll be around 11% for the U.S. global average effective tariff rate. That's up maybe about 0.5%. I think we're going to have to see what comes next.
Right.
The president also made a couple decisions. I'm sorry. I know.
No, that's okay. Go ahead, quick. Yeah, you can wrap up.
I was going to say, we also got some countervailing moves. So earlier this week, the president decided to offer some relief to aluminum importers, and that's been a huge drag on manufacturers in the U.S. So I think the president is seeing that some of these tariffs are having a negative effect on the economy, and that might be a positive sign, moving later into the summer.
Well, here's another sign. The U.S. 30-year bond yield trading above 5% for the longest stretch since the dawn of the financial crisis, echoing some investor concerns about a growing debt pile and sticky inflation. So starting to see these signals that certainly keep us on our toes. Hey, Chris. Thank you. Chris Kennedy, Economic Statecraft Lead for our Bloomberg Economics team. Tim, he's there in our DC.
Yeah, I mean, truly does it all. War to gas to tariffs to diesel to inflation. So, appreciate him keeping an eye on all this stuff for us.
All right, that is certainly the macro. Let's get to the micro. And Houston, we kind of have a problem. OpenAI said its advanced artificial intelligence models inadvertently hacked Hugging Face in an unprecedented incident that prompted fresh calls for curbs on the technology. Are you worried?
I am among those who might be a little worried.
A little perturbed?
Yeah,
a little worried?
Let's see if Ed Ludlow says we need to be worried. He's the host of Bloomberg Tech. He joins us from our San Francisco bureau. Ed, I got a text message just minutes ago from some friends. They sent this article to the group chat and said, be honest, how many years do we have left?
This is a big story, but it's not a scandal. And it's really important to understand what happened chronologically. Okay, so OpenAI was testing GPT 5.6 Sol, which is its most advanced publicly released model. And it was testing another more powerful but unreleased model for their advanced cyber capabilities. Okay, they were running an evaluation of them. And what they did was reduce the guardrails on those because it was in what's called a sandboxed environment, a closed environment, which OpenAI had control over. And so that was the instruction to the models. We want to test your cyber capabilities. evaluate them. So the models were like, okay, in order to do this, to pass the evaluation, the models wanted more information. So they exposed what's called a 0-day flaw, basically a flaw in the code. It's called 0-day because the engineers, the human engineers, had literally 0 days to find and patch it. And in doing that, the models got access to the internet. So their next logical step was, okay, our instruction is to pass this evaluation. We could do that if we had more information, and Hugging Face seems like a really logical place to get that information because it's a platform that hosts models specialized in this area. So it breached Hugging Face systems to get the information to try and cheat the evaluation. So that part is a concern. But Hugging Face detected that this was happening. So this is a lab experiment, essentially, under closed parameters. And the way that the industry has reacted is there is some concern because the big takeaway is it shows what these frontier models are capable of.
Okay, I'm glad. That's where I wanted to go with this, because maybe it's fine in a lab if it's OpenAI and Hugging Face, but if this technology, let's say, gets out, and who's to say that the same guardrails will be in place with a model maybe 1 year, 2 years from now in China, for example, that may not have the same guardrails. I think that's what has people concerned.
Now we're getting to the story, the story behind all of this, which is these were two American companies. And OpenAI is neck and neck with Anthropic, but it's a leading frontier lab that was testing American-made models, closed models. Hugging Face's defense was to rely on an open source model, but where the guardrails limited the ability of that model to defend it against a cyber attack, which in this case so happens to have been instigated by a US-made frontier model. I know that that's hard to track, but you're quite rightly pointing out the question that loads of people in industry have, which is, what if this wasn't OpenAI? What if this was a Chinese model where Hugging Face is the defender of what's going on, isn't able to properly protect itself? That is the debate that's been opened.
I guess my question is, Ed, if there are guardrails, which we'll assume will be in place, is that 100% or 99.9% guarantee that things will not go wrong or astray? Or we don't know?
Okay, so again, it's important to go back to OpenAI was testing two specific models with the guardrails intentionally reduced. And the way to think about it is when you have the guardrails on, you are testing how a model behaves on public roads. I know you guys are doing a car segment. So say on public roads, you want the guardrails there. In a sandbox environment, a closed environment you control, you pare back the guardrails because you want to see how it can perform at its greatest capabilities. Closed models, you can do that. You have control.
Okay.
The worrying part here is the Hugging Face part, that they relied on an open source model where the guardrails that are there for very good reasons also diminish that model's ability to defend it against a malicious action, whether it was a mistaken action or not.
Okay, so then, all right, this story has definitely caught our attention. Just got about 40, 50 seconds left. So anybody who's listening and somebody comes up and like, did you see this story? You would say, not a big deal? Or? Yeah.
So the cybersecurity industry, the AI industry, and their investors basically think this is a good thing because they want the leading labs, OpenAI in this case, to be testing what these models are capable of and then reporting back. So OpenAI and Hugging Face have got together, they have partnered, they've taken steps to make safe the situation and do a full investigation, and that report will come out. But that's being cheered as a good thing. The information from this whole experience will be valuable.
All right, that makes sense. And giving us the context and understanding.
So we're safe for now, Ed. Thank you.
For now.
For now.
Skynet. Yeah.
To be continued. TBD. Ed Ludlow, thank you so much. Host of Bloomberg Tech. He's going to be back later in the 4 p.m. hour. We got a lot of earnings to get through, including Alphabet and Tesla. So Ed's going to join us with that. And speaking of Tesla, we're going to talk to someone who's covered it, along with the big three, and so much more. Our own Keith Naughton's going to be here. Stick around.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Little change right now on the S&P 500 index, higher barely, up under 1 point. We've got the Dow advancing by 0.2%. NASDAQ, though, in the red, down 0.3%, with the NASDAQ 100 index down by 0.3% as well. All of this ahead of key earnings out of both Alphabet and Tesla. Right now, Alphabet shares down 0.1%. Tesla also lower by 0.8%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, pushing higher by 0.9%. 10-year 4.65%, the 2-year 4.29%, and a 30-year 5.14%. Spot gold up 1.5%, 41.36 the ounce. West Texas Intermediate crude just above 87 a barrel, up 3.2%. AMD has agreed to invest up to $5 billion in Anthropic. AMD up 1.6%. Meanwhile, OpenAI plans to spend tens of billions of dollars on a massive new data center near Savannah, Georgia. For the first time in 10 years, the United Nations is set for a leadership change. Join us tomorrow, 5 o'clock Eastern, for special coverage of a UN town hall to hear candidates for the next UN Secretary General debate. That'll be live from UN headquarters. I'm Charlie Pellet. Carol and Tim, that's a Bloomberg Business Flash.
Thank you, Charlie. BMW pulling out of this year's Paris car show as its new CEO cut costs following a major profit warning. Also on the Bloomberg, Tesla's Cybertruck may be on its way to becoming viewed as the greatest automotive flop of all time, similar to the Ford Edsel, which was introduced back in 1957. There is always...
You don't see a lot of them on the road today. Let's just say that.
No, always a lot going on in the global auto industry, covering all the twists and turns, the tight curves of the global auto industry, from bailouts and buyouts, Elon and EVs, to China's coming of age. Bloomberg's Keith Naughton, who began his career back in 1985, coming to Bloomberg in 2009 amid the great financial crisis and the big three auto bailout. He's written about all of it and more. We are delighted to have him in New York. His home perch has been in the Detroit area, but he is getting ready to wrap up his valued and very respected career here at Bloomberg. We can't even believe we're not going to be like, call Keith. We want to talk to him about this.
I can't believe they're letting you retire.
Yeah. Well, it's time. It's time. Every good career has its moment, and leave out on a high note.
Well, we are really happy for you. It is sad for us, as Carol mentioned, and we do want to start at the beginning of your career, all the way back in 1985, 41 years ago. Take us back to that time. You were at the Indianapolis News, and it's where you began your career. And I think it's so notable because it's like, that was when so many U.S. automakers were concerned about Japanese cars.
Yeah, so that was the big story in that time. The way I got the auto beat is my business editor at the Indianapolis News, this guy named Ed Lawler. He said, so I grew up in Detroit. He said, so you're from Detroit, so then you'll cover the auto industry? And it's like, okay. But yes, so, it was all about the Japanese coming to America in those days. Sounds like an echo, doesn't it?
Yeah.
And so one of the big stories I was covering at that time was Toyota was looking for the location of their first American factory. All the states were, vying for it, Indiana included. It ended up going to Georgetown, Kentucky. So I was there for the groundbreaking of that one and interviewing the governor at the time, Martha Lane Collins, and now here we are with when will the Chinese come to America, and where will they locate, and do the states want them, and it'll be very similar.
Do you remember what car you were driving?
Yeah, in those days I had a Renault Alliance.
Oh, wow.
Made by UAW hands in Kenosha, Wisconsin, when Chrysler and Renault had a joint venture.
Well, I'm so glad you mentioned Chrysler, because one of the icons or iconic figures of the auto industry is Lee Iacocca. And we actually have a picture, 1989, of you with him, and we'll bring it up for everybody.
Yeah.
Tell us about this moment. For those on radio, it is Keith Naughton a few years ago, a couple decades ago.
With a lot more hair.
No mustache, though.
But Lee Iacocca was like...
He was iconic. Yeah, no. So that's obviously a scrum, and I'm clearly laughing too hard to try and impress the chairman. But no, he was something. I mean, I remember when he came back from Japan, And this is when the original George Bush had gotten sick on the lap of the Prime Minister of Japan. I don't know if you remember that moment in history. So Leto comes back and he gives a speech.
It seems so charming amid the geopolitical backdrop today, but go ahead.
Yeah. He goes back and gives a speech to the Detroit Economic Club all about how we should essentially, and he used this kind of verbiage, go to war with the Japanese, which, given the whole World War II thing, was probably not the right way to put it. But but that was Lee Iacocca. He pulled no punches.
And had to deal with his own crisis, though, right?
He did.
At Chrysler.
Oh, absolutely. I mean, he saved, not more than kind of, he definitely saved Chrysler. They were in dire straits. And remember, he got fired by Henry Ford II, right? Hank the Deuce.
Yep.
Fired him. Iacocca's the father of the Mustang. And then he, rehabilitated himself by saving Chrysler. It was a great time to cover the industry because there were such swashbuckling characters in those days. Bob Lutz, all these guys that just said what was on their mind.
It wasn't all the auto industry for you, though. Some other highlights in your career, even before coming to Bloomberg. Senior correspondent at Businessweek, you covered the auto industry. You were auto reporter at the Detroit News. Before Bloomberg, though, you were Detroit bureau chief for 10 years over at Newsweek. We covered the auto industry there, but also some other stories, including
Martha Stewart. And this little-known man put on the cover. He's president today.
Yeah, Donald Trump. Yeah, I spent a couple of days with the Donald and Melania. There's the cover. Yeah, that's the one I wrote.
For those on radio, it says it's Donald Trump back in his apprentice days. You're fired.
Right. So he was. The story on how that ended up on the cover was. This all sounds braggy, but I was talking to Jack Welch. I did this all in one day. I was talking to Jack Welch, former chairman of GE, and he told me it was his favorite show to watch. He and Susie would watch it every night.
On his network, right?
Yes, on his network. and so then we reached out to Trump, who in those days there were no PR people. You just called his secretary, and he gets on the phone, and he told me that in no uncertain terms we should put him on the cover. And I'm like, well, right now it's just a business story. We're going to do a business story in the business section. No, you should tell Rick Smith, who was, the publisher at the time, put me on the cover. And then when it went to the meeting that day, the editor said, okay, let's put him on the cover. I called him back, and he said, I'm glad you listened. So then we both flew to Mar-a-Lago and hung out for a couple days.
Well, what did you find about him on that trip to Mar-a-Lago? Obviously, no prediction that he would one day become president and serve out another term.
He was a Democrat then, and he had run as a Democrat. Sort of run as more of a marketing exercise in the Gore-Bush election, the election of 2000. So we talked a little bit about that, and he and Melania at that time were engaged. They got married a year later, and of course, Bill and Hillary were at the wedding. There's the famous picture of the four of them together,
isn't
right?
It like changing times.
But yeah, he was the Donald. We watched The Apprentice together, and he would, turn down the sound when it was the contestant segments, and then when he was on, he would turn it up to a deafening volume so no one in the room could talk.
So fascinating, like the places that being a journalist takes you, right?
Yes.
And to certain people. All right, let's talk to your time at Bloomberg. 17 years. You came at what was a really difficult time for the world, for the U.S., for the financial industry, and for automakers. Who can forget, right? The automakers being hauled before Congress, the CEOs.
Right. The bailout. Yeah, no, it was amazing because it was right as I was leaving Newsweek and starting at Bloomberg. When I was here for my training in New York, Obama was being inaugurated for his first term. And George W. Bush had sort of handed the baton to him to save those companies. And famously, they were all asked, they'd got in trouble for, there we go. They got in trouble for flying in for the hearings, and they're told they should drive in for them, so that's what they did. They were all asked to give up their pay, and everybody except Alan Mulally at Ford said they would. Alan Mulally said, yeah, I'm fine. And they're the ones who didn't take the bailout.
I was just going to say they didn't, did they?
No.
A lot has happened in the auto industry since then, and it kind of brings us to almost to today. The rise of EVs and the way that, even conversations that we had with you on our program in the last 6 years. At the beginning of that, and that's how long I've been doing this. That's why I went with the 6-year number. At the beginning of that, we talked to you about the huge investments that these U.S. companies were making in EVs, how difficult it was to get a Ford Mach-E and the wait list that a customer would have to wait on, and getting a Lightning pickup truck. And just a few years after that, we're learning that these investments are being pared back and the customers just aren't there for these.
It was one of the biggest misses ever. And I think we sometimes, our view of it isn't long enough. We think, okay, so Trump got in office and he took away the EV incentives and that's what killed the market. No, the market was withering before he got elected. Americans just, we live in a very big country. So range anxiety is real. It's easier in other places that are more compact and that have a better infrastructure for recharging vehicles. So particularly in the vast middle of the country where I live, people just aren't sold on EVs, particularly people who drive pickup trucks. The big bust of the whole American EV cycle was putting in pickup trucks first, because if you use an EV pickup truck to tow or haul, the battery is depleted in no time. So it's just not practical. So everybody is taking a step back. I actually think in some ways Trump does them a favor because it gives them time to regroup, as long as they keep those barriers to the Chinese, and hopefully they'll come up with a better solution.
We have another picture of you, I believe, with Alan Mulally, and this was in 2009, former Ford CEO. You reminded us he didn't take the bailout. Then where are you guys?
We were, he was, I think, in that picture being inducted into the Automotive Hall of Fame. And we're in Detroit, I think in...
Was it 2009?
Yeah, it might be a little later than that.
A little bit later?
I think it's more at the end of his time. But it was in 2009 that he avoided the bailout. And, he saved Ford along with his boss, Bill Ford. Never forget the Ford family runs Ford. So,
still.
But no, he was a rock star. And he was great to work with. And he also was one of those guys who pulled no punches and had things on his mind.
We were thinking about you. You're a lot of fun to talk to, and we just love covering this world with you. You've inspired a lot of us, and it seems like you've also inspired someone who's very near and dear to you, your daughter. We have another picture we want to pull up, and maybe you could tell us a little bit about this. That's you. For those on radio, it's Keith, obviously, and then there's your daughter?
Yeah, that's Nora behind me. And we're both scrumming Jim Farley, who is now Ford's CEO. I think that's at a New York Auto Show, maybe in 2019. So yeah, Nora has worked in different places. She was also at the Detroit News like I was. She was at the Wall Street Journal, Business Insider. So she's great, and it's great to have your child in the biz with you. So she's wonderful. And that was a great moment. And that picture was taken by Ford's chief communications officer, Mark Truby. He was monitoring the scrum, and he saw that shot and got our faces of skepticism. So.
Which you sometimes have to do when you're covering an industry. We've got to wrap up, but as you look forward to your world, and are you going to be keeping an eye on the auto industry?
Oh, I mean, I live in Detroit. It's hard not to.
Yeah.
you know?
Well, what's your thoughts? Like, we've only got 30 or 40 seconds. Like, there's a big lesson for the...
Yeah, I think it's a really perilous time for the American auto industry. They really do need to reinvent themselves before the Chinese arrive. And as Bill Ford said last week, they are going to arrive. And if the American auto industry isn't ready, lower priced cars, electric vehicles, if they aren't ready, they won't survive.
Are you driving an EV?
I'm not. So, see, I'm a mossback.
Okay.
Not even a hybrid?
No. My older brother has a hybrid, but yet I do not.
I keep waiting for what's
My
that car?
son has a hybrid.
There's another one. You're a gem. We wish you well.
Thank you.
Keith Naughton, Bloomberg News auto reporter. You will be missed. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are churning ahead of after the bell earnings coming up from both Alphabet and Tesla. Also, IBM will be reporting. Right now, we got Alphabet shares. We'll call that unchanged on the day. Tesla, meanwhile, down by 1%. We'll be all over those earnings as they break shortly after 4 o'clock Wall Street time right here on Bloomberg. S&P, as I mentioned, flat on the day with the industrials. Dow Industrials up 0.1%. NASDAQ and the NASDAQ 100 index both trading lower. They're down by about 0.3%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, pushing higher now by 0.9%. The 10-year 4.65%. The 2-year 4.29%. And the 30-year 5.14%. Spot gold at $41.34 the ounce. The precious metal up by 1.4%. Crude, big story today. WTI 87 even a barrel, up by 3.2%. Brent did see a couple of prints above 95, 94.25 now. Barrel of Brent crude up by 3.6%. Apple is readying an overhaul of its Mac line, seeking to capitalize on demand for powerful laptops and desktops fueled by the AI boom. Apple shares today down by 1.1%. Super microcomputer shares are soaring after the server maker issued preliminary results last night, saying its backlog hit a record on new orders in the quarter of more than 60 billion. Super microcomputer up now by 21%. For the first time in 10 years, the United Nations is set for a leadership change. Join us tomorrow, 5 o'clock Wall Street time, for special coverage of a UN town hall to hear candidates for the next UN Secretary General debate live from UN headquarters. Again, 5 o'clock Wall Street time, right here on Bloomberg. Recapping, S&P now down by half a point. I'm Charlie Pellet. Carol and Tim. That's a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Hey, go back a couple of years, and our Bloomberg Intelligence team out publishing some research about connected vehicles, smart vehicles. And they said they were going to be those on the road to be a $742 billion market by 2030, spearheaded by Tesla, OpenAI, and NVIDIA.
Is your new car a smart car?
Yes.
Okay.
It's crazy.
Medium smart?
It's super
Crazy smart. Okay.
Like, remembers how you pulled out of a spot.
That's
and then when
pretty
you
cool.
come back later, it'll park it. And it's almost a little overwhelming. Like, I'm a little afraid it's going to take over for me. It's pretty amazing. So we are kind of thinking about this. And, fast forward to kind of where we are today, right, Tim? I mean, in a big way, so much is coming at us. And you layer on AI and how everything is moving so rapidly. You do think how it's transforming so much. And our next guest talks about how AI is quietly transforming some of the world's biggest industrial sectors. So we're talking about automotive, defense, aviation, and that many companies still risk being left behind here.
We've got with us Rory Heilakka, Oliver Wyman's partner in the firm's Transportation and Services and Digital Practices Group. Rory, good to have you with us this afternoon. You and the folks at Oliver Wyman have this big report out on the industrial AI divide, how AI is quietly transforming, as Carol mentioned, some of these big industrial sectors. What is happening, and who could get left behind?
That's a great question. And I think we're seeing a couple things happen right now, and it varies a bit sector by sector, where AI is rapidly becoming a focus area for automotive manufacturers and automotive companies, airlines, rail companies, industrial mining, you name it. And it's become something that is already starting to generate real revenue returns for companies that have embraced it early. If you think about leveraging AI for better price decision, better servicing of offers for consumer-facing transportation companies, you're starting to see those benefits. But at the same time, you're seeing, real differences in how companies are evolving when it comes to embracing AI for delivering, complex, very real-world transportation offerings. So think about a rail network, airlines and airspace, cars on the road. So there's a lot that's happening. We're seeing some real differences in kind of companies that have always been more focused on deploying AI as a real transformation of the business and their people, versus companies leaving it kind of more as this is something that the technology team has to go and figure out for how we embed it in our business. And so you're seeing real differences across the industries. It still feels like really early days in terms of the level of change and evolution that we're going to see, though.
I'm looking at some various, statistics, in this report. Like here, 58% of aviation maintenance, repair, and overhaul professionals said that their value expectations from AI investments are being met or exceeded. That's up from 20% in 2024. How much, when we look at stuff moving around, whether it's, planes, trains, or automobiles, go where you want, is actually utilizing AI and it's making a difference? Are they all just at the beginning? Because it feels like, AI's been around for a long time, and I understand what's happened in the last 3 years is taking it to a whole other level. But give us an idea of how much is already happening.
It's a great question. I think if you think about certain things like manufacturing parts or cars or engines, AI and particularly machine learning have already helped companies realize substantial value. It allows you to much better model and predict behaviors of a closed system, allows you to design things, keep a factory up and running at a higher rate, which creates better economics. You're seeing it really in use and at scale in a number of those kinds of use cases. You mentioned airline maintenance, great example, where just having better visibility into the likelihood of a maintenance event and then being able to put the part in the right place, have the team ready to go, that drives real efficiency, and we've really seen that take off. When you think about using AI to do things like manage complex airspace and improve, what it's like on a Thursday in LaGuardia or going into Heathrow, we're starting to see that technology be put to the test, but you're dealing with a need to change a massive open system, use the interplay of the weather, aircraft networks, things on the ground, and that's a much harder problem to solve. So I think we're still in the early days of really figuring out how that's going to come together. And so I think there's a lot of change to come. And that will impact companies that touch all aspects of those operations and of that kind of value chain.
I think a lot of people are thinking about AI as a sort of layer of technology, the same way that we thought of the internet and just being online, maybe 25 years ago, and how that's sort of everything we do now is online. What areas though right now are missing not missing the opportunity, but have the most opportunity for disruption? Like, we don't see it yet because the technology's not quite there, but maybe we will in 2 or 3 years.
Yeah, it's a great question. I mean, I think the one sector we've probably seen play out really quickly over the last couple of years, given just the nature of what's happening in the world, is the defense sector. Certainly the role that AI plays in using drones in the battlefield. We've seen that, and we've seen the effects of disruption happening. New entrants into that sector bring that technology to life. If I think about in other areas like rail or aviation, I think the companies that are able to really rethink and transform how they manage their business, run their business, automate their business, change the role of people in the workforce, and do that quickly, they are going to find both economic efficiency and, frankly, improve the consumer and customer experience. And I think that's where you're going to see some real divides. And the challenge is, for a lot of these companies, you still need all of your technology infrastructure to come together and be able to support the use of AI. And that's one of the really big lifts. Modernizing systems, making the data available to inform, train, and support these kinds of models and tools, putting the physical infrastructure in place so you have computer vision. All those things are really key.
Rory, just 30 seconds left here. U.S. versus China, U.S. versus Europe, in terms of industries embracing AI for the good, if you will. And just quickly, if you could.
Yeah, really quickly. I think all three are going to make great strides. I know that's a bit of a muted answer, but
if you have to pick one, who's ahead of the race here?
If I have to pick one, I think the innovation coming out of the U.S. is really remarkable.
Okay.
I think and we're gonna see that play out in the next couple of years.
All right, really appreciate it. Good stuff, in-depth report, that's for sure. Rory Heilakka, he is Oliver Wyman's partner in the firm's Transportation and Services and Digital Practices Group, joining us right here in New York City. When we come back, a check on trading ahead of some big earnings. We've got Alphabet and Tesla, IBM also, ServiceNow, a few others.
The S&P 500 pretty much flat. The NASDAQ Composite down about 0.3%. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, getting ready for the last hour of trading on this Wednesday. It is July 22nd. Man, July. Whew.
Yeah.
Slow down, summer.
Summer camp for some kids ends in a couple weeks because the kids have to go back to school. Here in New York, it's not like that.
No, but you're right.
Kids go back very late.
Yeah.
But parts of the country, kids are already starting to go, get ready to go back to school.
Especially like down south and so on and so forth. You see kids heading back to school much sooner. We're certainly busy, keeping an eye on the markets ahead of the earnings are just starting to really pick up. And of course, we've got some big ones after the close, including Alphabet, Tesla, IBM, ServiceNow, and a few others. Having said that, we're definitely off our best levels of the session. Call it flat, though, on the S&P 500, not even down 1 full point. The NASDAQ 100 also pulling back a little bit here, down about 82 points, down 0.3%. If I take a look, though, inside the S&P 500 today, and you've got an index almost an even split. 259 names are actually higher today. SMCI, we're talking about Supermicro. That is your top gainer in the S&P 500. Some news after the close yesterday, so that is definitely moving higher. 242 names, though, in the S&P are actually pulling back today.
All right. If you want more SMCI, just stay tuned because we're going to talk about it in just a second.
We are.
I'm Tim Stenovec along with Carol Massar. Let's take a look at some stocks on the move today. We're joined by Bloomberg News cross-asset reporter Denitsa Seikova. Denitsa, let's start with telecom. Yeah.
AT&T. Let's start with the classics. Ticker T. Stock is up more than 2%. In earlier trading, it's such a surge as much as 6%. It's all about subscribers. It's all about bundles. The main metric that's catching my eye is monthly wireless phone subscribers that are up. It's been a very competitive field. The company is actually still down 8% year to date. Despite this surge we're seeing, we saw some optimism across the industry. Verizon, T-Mobile, all those stocks surge. It's been very competitive and hard to kind of find a new deal. It's like 3 big companies. There isn't too many new things you can offer, but they've been trying to bundle all those phone services
just
with
lower
wireless
prices.
service.
Just lower prices.
Well, they're actually raising prices, so
okay.
that's not happening. Well, I guess that doesn't work.
You want to catch my attention? Just lower your price.
That's
we move around so quickly. I mean,
AT&T, if you're watching.
You got to get on the Stenovec family plan.
Yeah.
Dad, Mom.
Come on.
Tom, are you listening or watching?
But the convergence model is working. One cool stat I saw, 40% of households that purchase home broadband are also buying mobile phone service. So I guess we should bundle and combine things.
Yeah, I guess you get a good deal.
Yeah.
All right.
It's all about the deal.
For a long time, our family was too big for the family plan.
I thought you weren't on it anymore.
Oh,
sorry.
Breaking news.
Listen, for a long time we weren't on it because they didn't have a big enough family plan. But then some of the companies got bigger family plans, so now the family can be part of it.
Oh.
So can I one
Some
more?
interesting developments here.
All right, let's go to, so that's AT&T. Let's go to Nike.
Nike is ending online sales agreements in China, potentially hundreds of distribution. They've been really trying to work on that region. Obviously, that's been their soft spot. It's been under a lot of pressure. They're trying to get tight control over pricing, inventory, and ending some of those partnerships might help. That said, investors are not too excited about the idea. The stock is down 2% today. The ticker is NKEE. And the stock is already down 37% year to date. We've seen progress in some regions, especially North America is doing well, but investors are especially worried about China. And it seems like this is not necessarily helping. The CEO is saying they're going to do a comprehensive reset of the China operations. They're really investing in their actual shops there. They have more than 200 physical locations. But nevertheless, it seems like the new plan is not taken so well.
These used to be about almost $178 a share. That was back in late 2021. I
So-
mean, we've talked about a lot of the troubles, and China is certainly part of it.
It fell in 2022. Nike fell 29%. 2023, it fell 6%. 2024, it fell 29%. In 2025, it fell 14%.
Yeah.
Ticker NKE Nike.
Yeah.
Yeah, so if you've been running, if it was a hill, and you were running in Nike sneakers, it's been easy because it's all been downhill for the most part.
Wow, Carol.
Okay,
Wow, that's
sorry, that was
beautiful.
harsh. I'm
That's
sorry, Nike.
beautiful.
It's an incredible, iconic brand,
It's
right?
iconic, and they've been doing so many partnerships, and they have a Skims partnership. They have so many things, but so far investors are not excited.
All right, you know who's excited? Investors, and you know
they
what they're
are.
excited about?
Yeah, super
Micro.
microcomputer. That's what they're excited about. Shares soared as much as 26% in earlier trading. Now we're still in double digits, about 20%. The ticker, of course, is SMCI. The company said its backlog has reached a record. We're talking more than 60 billion in new orders during the quarter. That's quite a backlog. Investors are pretty excited. That said, the company hasn't been doing too well. This year, it was actually declined 13% before the news. It has suffered suffered 28% fall, and that was when they announced that equity offerings worth $7 billion, so investors weren't too exciting. But those results are posting seem pretty good. They say margins are going to be in the range of 15 to 17%. It's better what analysts are expecting. Everyone's looking at profitability. So clearly, investors are placated, analysts are placated, and at least for now, for today, that's working. It's crazy how one day can change the picture for the whole year.
You know, I always love like when you guys come on or somebody who covers like these companies or the sector, and they're just like, what's fundamentally changed? I mean, really? I don't know.
Probably not that much.
All right, good stuff. Denitza, thank you so much. Check out our Stock Movers podcast, 5-minute episodes, pick winners and losers in the stock market. Find it on Apple, Spotify, or anywhere you get your podcasts.
Coming up next, we're got the fun beginning at 3 o'clock, but also at 4 o'clock when we hear from Alphabet and Tesla. We got instant insight and analysis from a great team. The close starts now.